Well, we have a special guest joining us this morning. Johanna Chua is Managing Director, Head of Emerging Market Economics and Chief Asia Economist at Citi. Johanna, great to have you with us here on the program on CNBC TV18. Prashant here. So let's just get your sense, Johanna, on tariffs and 2nd of April and how you think the Trump administration will play things. You can make a case on both sides, right? You can say, well, it's an ideological thing. They're strong believers. Doesn't matter if short term there is pain. It's already been telegraphed in some ways, and they will go ahead. Or you can argue that at some point that they pay attention to markets in pain. So this year S&P's from the highs, S&P is down about what 7% or so. What is your sense? Are they going to go big on tariffs, or you think it's again going to be a little bit of giving, a little bit of sort of waiting, like what we've seen so far?
Right. Look, I think we should expect more, right? I think Trump and even Treasury Secretary Scott Bessent is already downplaying some of the short-term pain happening in S&P. With Scott Bessent saying this is a healthy correction. Remember the early inning of the tariff beyond China, which is already 20% off the bat. A lot of the tariff is really partly art of the deal negotiation to try to extract concessions, and that's why he's been aggressive, particularly in his close allies like Mexico and Canada. But I think after this early inning, I think going into April 2nd onwards, I think we're going to have the more structural framework of tariffs, because under Trump's view, we think tariffs serve three purposes. It's part of negotiation, it's revenue raising, and it's also kind of international trade rectification framework. And I think the combination of the second and third kind of objectives of revenues and kind of trade rectification framework is a really core part of this tariff policy. And we haven't really heard much of about that. So we should see going into April 2nd, Europe has been fairly, and aside from targeted tariffs, Europe hasn't really had the big brunt of that, and I think that is still coming. We still have a number of Asian countries that could also be relatively vulnerable. So again, China also is not out of the woods. It has 20% off the bat, but there's still a lot of number of issues that may be raised in China, whether it's the size of the bilateral trade deficit, whether of the U.S., and whether there's trade diversion and other currencies framework. So I think this is not yet we're not yet done, but certainly this is something that the market is watching very closely.
Absolutely, Johanna. And these are very fast-moving events, right? And what we're also seeing is increased bilateral engagement. I mean, the political commentary between India and China, for instance, there's a very clear thaw out there, talk about more collaboration and sort of coming together. So equations are changing fast. But given what we know right now, this morning the Bank of Japan obviously has been on hold as well. Perhaps they also want to wait and watch. What do you see ahead for, let's talk about these three big pieces, Japan, China, and Asia, in terms of impact on growth and, more importantly, further efforts, China as well. Would you expect more monetary and fiscal measures to not just counter tariffs, but to boost the local economy?
Look, I think a lot of heightened trade policy uncertainty is not only going to impact trade activity and create a lot of distortions in trade activity, but it could really hold back a lot of a lot of capex decisions. And that's obviously not good for growth. That's really much worse for for economies that are reliant on trade. And clearly, China and Japan are much more open to trade than, say, U.S., which I think in the global space is actually a little bit relatively more insulated. But I think the challenge here is that we're not completely feeling the effects yet of this kind of trade uncertainty and volatility on economic activity, partly because Trump already telegraphed the tariff on China way ahead, even during the campaign. So there was already a lot of anticipation of China getting hit by more punitive tariffs. So what we've seen across Asia is these signs of export front-loading. So we see this certainly in, say, ASEAN data. Even, the expectation of targeted tariffs on, say, auto and auto parts is already hitting Korea. And so we're seeing a little bit of front loading there. That's probably also impacting some of the manufacturing cycle. So again, in the short term, we're not really feeling the full brunt. But again, because this trade policy uncertainty combined with other forms of policy uncertainty, especially in the U.S. related to kind of federal spending cuts, that really can create a bit of a growth headwind. And we're seeing this already in expectation of a pretty sharp slowdown in the U.S. So when there's a little bit of a front loading, a building up of inventory, the worry there is that if growth is underlying demand is slowing down, we get the reversal of that, kind of the payback effect. which means kind of growth headwinds could become, could worsen. And this is part of the reason why, even though the data is fine, I mean, clearly we saw out of Japan, spring wage negotiations, I mean, not hugely out of line with what BOJ was expecting, but it is showing a lot of resilience and support relative to last year. But I think BOJ wants to hold back yet because we don't really know what the picture is going to look like on global demand.
So in light of that, what do you think the Fed's trajectory would be? Largely because, the tariffs, etc., are expected to be inflationary. At the same time, the spending cuts by the government are expected to weigh in on the economy. And then the big S word that everyone's using, right? Stagflation. How do you expect the Fed to navigate through this? And what are you looking forward to tonight in terms of commentary? And what are your expectations, base case, on the, Fed rate actions this year?
Sure. Look, the buzzword is that uncertainty. There's just so much uncertainty. When you look at the trajectory of economic activity, clearly there are already signs that the economy in the U.S. is slowing down. You see that obviously with some of the mixed data coming out of retail sales. Obviously a lot of soft data like survey, consumer confidence, business confidence is all kind of trending down. So that obviously creates a lot of headwinds about what the growth trajectory is. And in fact, we're expecting a 0.1% contraction on first quarter GDP growth, which is really a sizable slowdown from the kind of 3% run rate we've seen in growth last year. It's not as bad at what the Atlanta GDP now is suggesting, but it is still certainly a slowdown. But on the flip side, because of this kind of tariff pressure and what that means for inflation, you look at the inflation expectation surveys coming out of Michigan Inflation Survey. I mean, both 1 year and even long end inflation expectations have gone up a lot. And remember, part of the narrative of how inflationary pressures can be blunted from the tariff would be a stronger dollar. But what we're seeing in FX is we're actually not seeing a stronger dollar. In fact, we've seen a bit of a weaker dollar. So that even is allowing a little bit of a cost push pressure on inflation. And so when you have these two uncertainties of kind of inflation while growth headwinds, I think at this point, the path of least resistance for the Fed is let's just wait. So I think overwhelmingly people are expecting the Fed will be on hold. Despite the inflationary fears, I have to say, I mean, we have seen some gains on disinflation. So I do think that at the margin, we're expecting coming into this FOMC is that the dot plots, there could be a slight dovish tilt because it's the growth shock that's become a lot more volatile. So we are expecting that they might signal a 75 basis points cut instead of a 50 basis points cut for 2025.
Johanna, just a couple of questions. Do you expect the dollar to keep heading lower, or you're expecting a bounce?
Look, I think at the moment the dollar has kind of mixed messages, right? I am a little bit worried that we could have, depending on how severe what's happening in terms of the tariff, we can get a little bit of a pullback in terms of dollar strength. But by and large, now the dollar has multiple stories that are kind of weighing on it, right? It's not just the slowdown in the U.S. It's the fact that there's been a lot of long dollar positions that have been reversal positioning. Where we are coming from is obviously also weighing on the dollar. But there's a new element now to the dollar, which is that over the last month or so, we've had a lot of kind of shift in dynamic as foreign policy, particularly in the global security architecture in terms of how U.S. is responding to what's happening in Europe, for example. So I think it's starting to weigh a little bit more about the weight of the dollar as the dominant reserve currency. There's more and more narratives now that Europe is kind of waking up to this realignment of security architecture, that maybe Europe now becomes a little bit of a competitor to the dollar. And I think that is also weighing a little bit at the dollar. So even though, certainly there could be a little bit of interim bounce, we're no longer seeing, as much of the dollar rebound as people had thought there would be associated with tariffs.
Okay. You were expecting a sharp, because tariffs are up, that should be dollar positive, but dollar's headed lower. Exactly the 5% higher on tariffs, 5% lower on the dollar, right? So but it's good for emerging market flows. So the question is, if you get, as you said, you're expecting structural tariffs from this going into the 2nd of April, right? And a more meaningful, meaty kind of thing then, and that perhaps would put upward pressure to the dollar, not so much because other currencies are waking up like the euro, etc. But even then, it kind of puts a floor, maybe. What does it mean for emerging market flows? Lower dollar is traditionally seen as very good for EM flows. So just these two things, US slowing down meaningfully, dollar maybe around these 103, 104, 105 levels. What does it mean for these two things if it pans out? What does it mean for EM flows?
Look, I think we have to also understand what's happening in terms. So first of all, there's a lot of uncertainty. We don't exactly know, what's the kind of the trade policy action coming into April 2nd. If it's not as bad, if a lot of the tariffs is maybe sort of targeted to Europe, but pretty much, Trump is going to kind of soften the blow now, maybe kind of de-escalate. I mean, Mexico so far has actually been quite, relative to Canada, has been a little bit more on the surface diplomatic in terms of how it's dealing with Trump. And if in the end we get towards some sort of de-escalation from sort of USMCA partners, I mean, that could help at the anchor a little bit on some EM, like particularly Mexico. I think the rest of East Asia, we just have to figure out whether there's a material ramping up or not. And my expectation is maybe the focus on post-April 2nd will have a little bit more of Europe. Maybe there'll be some targeted tariffs. But, China already has 20% off the bat. And again, it's unclear whether Trump is going to escalate that a lot. If it's a lot more than expected, then, there could be a little bit of volatility. But I actually think it may not be that bad. Now, for EM, the challenge really here is, so if the uncertainty is not too bad, then I think this kind of slowdown and this kind of room and headwind for Fed easing could provide a little bit of support. But we have to watch, right? Because there's a kind of a slim margin between kind of a manageable kind of tariff pressures versus a sudden risk off. Right? Whether, if Trump does something much more unpredictable than we expect. And then we also have to worry about the growth cycle. If US, for example, slows down a lot more, or we get this, like I said, this export front loading, that could reverse. The other thing we need to watch is renminbi price action. Like right now, PBOC is still keeping renminbi relatively stable, and we think that it's partly because of part of negotiation. But again, if let's say Trump does something more aggressive, these are some things that we need to watch very closely.
Well, it's as you said, the buzzword is uncertainty, and so many things into the mix. Thank you very much, Johanna. Look forward to our next chat, and as we sort of deal with very fast-changing events and macro dynamics. Appreciate your time here on CNBC-TV18. We'll take a